Welcome everyone. This event is co-hosted by the Open Insurance Initiative and Copenhagen FinTech. It's the big opening day in Denmark, so all restaurants and bars are opening up today. So I thought it would be very fitting to talk about open insurance in that context also. So the program for today is a short welcoming here from the Open Insurance Initiative and Copenhagen FinTech. 9-10, that will be in a couple of minutes. Then we will get the key learnings from the call phase of open banking by CEO and co-founder Rune Maj from Nordic API Gateway. Then we'll move on to open insurance, what, why, how, by Fouad Hosseini from Open Insurance Initiative. From 9:50 to 10:10, we'll talk about the commercialization, some of the illustrative case stories from around the world by Simon Torrance. And then in the end, we'll have a panel debate where Insurance and Pension, the Danish Industry Association with Side Flor Toft, co-founder and COO Esben Tofte from Penny.io, and Vice President, Head of IT Development, Michael Poulsen from Tryg will participate, and that panel will be moderated by me. So a little bit of background here. So the European Insurance and Occupational Pension Authorities, the EIOPA, they have launched a public consultation on open insurance, focusing on access to and sharing of insurance-related data. And EIOPA considers open insurers as accessing and sharing insurance-related personal and non-personal data via APIs. And the main areas of that consultation paper will also be a little bit the starting point for our discussion later on. But that will be like the open insurance definition and use cases, some of the risk and benefits of open insurance, the regulatory barriers, and possible areas to consider for an open insurance framework. With that, Fouad, I will ask you to also just give a short intro to the event, and then we'll hand it over to Rune Maj from Nordic API Gateway, or actually AIA as it is called now. But Fouad, over to you.
Thanks, Thomas. So my name is Fouad Hosseini, and I am the founder of the Open Insurance Initiative, which is a project that I launched 2.5 years ago. And it's good to see open insurance is now a regular topic on the agendas of most fintech alliances. And I could say the same about the increasing interest that we're receiving also from incumbents, exploring the pros, the cons, the use cases, and the legal implications. For me, this is probably the 50-ish webinar in 2.5 years. And it's been an amazing journey. I've had hundreds of conversations with regulators, banks, car manufacturers, tech giants. And the overwhelming message has always been that open insurance will literally transform the insurance markets. Having spent 20 years of my life in underwriting, reinsurance, and operations, I can probably better envision where the best future lies. Thanks, Thomas, for organizing and hosting this webinar. Back to you.
Thank you very much. And then I would like to leave the virtual stage to a true pioneer in the field, not necessarily in open insurance, but you could say open banking and maybe even open finance. So we thought it would be a great way to start to get kind of the personal, also a little bit of the personal story of Rune Maj, the co-founder of Nordic API Gateway, or AIA as it's called now. So Rune, I will leave this stage to you. And
thanks, Thomas.
Go ahead, and if you have anything to share, you just do that.
Yeah, I guess I can just share directly here from, right?
Yeah, exactly.
So let me bring up the presentation and let me know when you can see it.
Just one thing I forgot to mention in the beginning that is quite important. We will be recording this webinar and possibly also make it open for everyone else to watch afterwards. So just FYI for you guys that are on the call now.
That's why I put on my glasses and the nose.
Yeah, it looks very good.
So can you see my slides? Do you see that full screen? As Thomas said, I'm running a company now called Aya, formerly Nordic API Gateway and formerly Spear. And I will try to go through not what I do in the company as much as the learnings we had from like being in the field of open banking really early on, before the term was even there, before the regulation was even there, and then to where we are today and what we've seen in that field, because I think there will be a lot of like similarities to what we will see in the open insurance field as well, both in terms of like conceptions and strategies and so forth. So I hope that I can inspire a little from what I learned in the field of open banking and give you something you can think about in terms of this new exciting field.
Ole,
So
we actually see your presenters, your 2 slides. So I don't know if you can change it to just so we can see them a bit better. It's the text is a bit.
Yeah, I actually don't know why I can't. It's because it has. Let me see.
If you can, that's. Oh, yeah.
Is that better?
Perfect.
Cool.
Thanks.
So just a few words about what we do in Aya. What we're trying to build is an open banking infrastructure that simply works, and I think that alone, in the market we're in right now, depicts also what is at stake when you start thinking about to API enable a full sector or a full industry, because like even having like regulators and participants in the ecosystem being willing to do so is not necessarily solving the task, because like APIs in itself is not a standard per se. It's just a communication protocol between machines, right? That makes it very easy for the developers to connect 2 environments together to create like some kind of seamless experience. What we focused on is like making sure that everything that happens within open banking should be based on the one in control should be the one sharing his data, or allowing access to an account to do payments and so forth. So we always think about the one that shares data. Also with our clients, we don't give our clients access to unnecessary information. We make sure that everyone upholds like the consent structure and the transparency around what is being shared. The other part is compliance. I think that once you start doing these things and you're working with financial institute or banks, or if you're working with an insurance company, it becomes really, really important that these companies stay compliant, even like sharing out data, but also if they're using shared data, that this happens in a way where you can't be criticized later on for using a vendor that made you incompliant. So we focused a lot on that. And the last part was like quality over quantity. Like doing Denmark took a long time to do right. Doing Sweden, Norway, Finland went a bit faster for us, but still it took a long time compared to where we see our competitors are moving. But we took the stance that we had to build something that worked for a full market, that allowed any use case to appear in that market before we move to the next. Because otherwise you can end up like doing APIs here and there in Europe and then have like an average market coverage of 50% in any market, right? And imagine that if you're building infrastructure, if it's for insurance or if it's for banks, that very similar to like using your phone, that if you go to one city, you can use your phone with this supplier. If you go to another city, you can use the phone with this supplier. That doesn't really work. So that's what we set out to solve. Today we have a bit north of 130 clients, actually more than 40 banks as clients here from the Nordics and also some international banks. We're able to connect to more than 2,000 banks spread out over 21 European markets. We do process more than 1 billion transactions on a monthly plan. We have more than 10 million logins through our platforms every month to accounts. We already do more than 500,000 payments on this, and this is just emerging numbers, right? End of early last year, we did 10,000 payments. End of year, we did 400,000 payments. So this segment is growing as we speak. We have customers like Danske Bank, OP Bank, DNB, Luna. We also have like payment platforms like Checkout in Finland, Svea, ConnectPay. We do top-up cases, like top-up payment cases for guys like Value and Sampension here in Denmark. Right now, we don't work with insurance, especially not in Denmark, because there's like particular Danish laws preventing insurance companies from actually using data to create profiles out of users, which I find a shame for the Danish market. But we've seen in many other markets that open banking providers are also starting to kind of share data for insurance companies. The straight line to open banking success, if I should depict that and brag a bit about it, it would probably look a bit like this. I started Spear, which was a PFM service, personal finance management service, in 2011, actually 2010 in stealth. I set out to create a service that allowed anyone to kind of be on top of their money moving into the virtual space. In 2010, it became increasingly important that there would be any tools that could help us, because money had been virtualized to an extent that kind of didn't solve the issues people they had with kind of planning out their money or understanding how their behaviors were. So that's what Spear set out to solve. And it looked kind of like this. And you could say, okay, so why didn't I just plan this out better? But in reality, what happened is that one of the first red flags we met was trust. And I think you're going to see the same in the insurance world, that no one thought that it was possible for a startup to ask people for their financial data back in 2011. Said no one will share data with you guys. They trust the banks. They don't trust a little company that works from a basement and guys that are eating pizza, whatever their conceptions would be. So we actually set out to build a service that was based on trust. So the whole privacy by design was core part of our launch of the company. And I think today with GDPR, we are in a much better shape in Europe, at least, to launch new industries with APIs, because we have a lot of protective measures in place for this. We had to build that trust ourselves. So we took like transparency as one of our goals. We took privacy by design. We put into our own user terms from day one that we were not allowed to use the data we received for anything else than what the user instructed us to use it for. And we kind of took that learning and put it all the way through into Nordic API Gateway. The other red flag we met was that we soon realized that all our customers, all our users, they wanted us to access the data automatically. They were fetching files from the net banks or the web banks and then uploading them to our service because there was no APIs. But everyone, the top one user request, and at like a year in, we had more than 100,000 users. And the top one request was, please automate the retrieval of my data from my bank. So already a year in, we actually gained the trust, and people, they wanted us to have that data automatically. So we went to the banks and they said no. At that time, they saw this as the gold and they were protecting the gold. If you see it as gold, it makes sense to protect it, right? And they really didn't understand the whole corporate social responsibility part, which probably also would be the wrong way to go in, but we did that. And they really didn't see the value of their own customers asking us to be able to fetch the data automatically. That would actually be like extending their help to further platforms than their own. So we had no success. We actually were pretty close at doing a deal with almost all Danish banks, but it kind of like went south in the 11th hour in 2012. So we started building a solution where we could fetch the data automatically ourselves. At that time, there was no regulation helping us to do so. But on the other hand, there was also no law specifically preventing us from doing so. So we built a solution that kind of uncovered the APIs that the mobile banks were using to talk back to the motherships of the banks. And then we emulated on behalf of the bank customer communication with the bank. And we piggybacked on the customer's right to use that API and also European copyright protection laws, the European Copyright Act directive. But nevertheless, one of our partners, which was the second biggest bank here in Denmark, disagreed at that time with the compliance of the solution, and we ended up actually being in a dispute with that company, and that went public, and we spent a year like fighting back and forth about the citizens' right to own their own data. And in the end, we actually were green flagged with all authorities in Denmark, even police. I was actually addressed with a concern that could have led to me being imprisoned for 1.5 years. At that time, we had like lawyers assessing these things. So I was told that this doesn't really make sense. And we went to the police and they agreed. And we went to the state attorney and he agreed as well. and then the Data Protection Agency, the FSA, the Forbrugerombudsmanden. And we actually ended up in 14 getting an agreement from the Forbrugerombudsmanden that allowed us to process data from banks, regardless of the fact that anyone else was actually not allowed. Even the banks were not allowed to process this data. So we ended up in a situation where we were the only company in Denmark that was allowed to process transaction data from banks. The banks themselves had a dispensation with the Ministry of Commerce to do so, to show it in the mobile bank, but they were not allowed to look at the data or process it for any other purpose. And we actually were that, but still we kept to the strategy of privacy by design. So we never used the data for anything else than what our users instructed us to do. In 18, everything became rights. PSD2 was kind of launched in January 18. So now we could do this within the regulated space. So at that time, we launched Nordic API Gateway. We kind of built the whole infrastructure for the Nordics on top of our own solution. Because funnily enough, when this regulation that gave the rights to a company like mine, which is a TPP, third-party provider, to access data from banks, the regulation that should actually be in place in order to define how those interfaces should be was delayed to the extent that the APIs that the banks were obliged to provide, they came in September 19. So at that time, we could safely launch the solutions we had. Luckily for us that we actually built that net of repurposed APIs for ourselves. So we launched with Danske Bank in 2018 in all 4 markets, like 1.5 years before the PSD2 APIs were ready. If we then look at the path after that, you could say now regulation is in place. So that must be a straight path. But actually the path has been even curvier after regulation has been into place. And I'll try to go through why. And I think like the learnings there is particularly important to discussions that you will have throughout the day on like, should this be market-led? Should this be industry-led? Should it be policymaker-led and so forth? How centralized do you want to do the rollout of, for instance, the whole open insurance concept? So in theory, what we want is one API to fetch all the data from all the banks in Europe, right? It's a harmonizing setup to be in EU, and the directive should help us get to a point where everything is standardized so that we can like have like liberal approaches to doing payments and fetching data and so forth. ASP is the word for the one serving the accounts, so that's the bank. So the banks should be providing this single API that we all could be using. In reality, it looked more like this. So the idea was to have one API, but there was a lot of local authorities, local policymakers and lawmakers that had an effect on this box in the middle. The TPPs, the third-party providers like my company, had a lot of ideas and interpretation on this, and the banks themselves, the ASPSPs, but also the NCAs like the FSAs and so forth, the data protection agencies of the local membership countries had a lot of interpretations here, and the EBA, European Banking Authorities, and also the EDPB, which is like the European Data Protection Board, had a lot of ideas on this. So what happened in reality was that everyone saw different boxes that were slightly aligned with each other's, right? And then they built policy on top of this. And in reality, everyone forgot that in the end, the reason why we did this was that this woman, Charlotte, she just wants to be able to do her PFM, like being able to be in control of her money. So she has money enough to kind of serve her kids and go vacationing with the family and so forth. She wants to be able to quickly do her banking business. She wants to perhaps do bookkeeping if she works for a company that does that. And she wants to stay safe and in control of her personal data. But if you look to the left, what we ended up in is something I later termed or coined the interpretation jungle, where we had like the PSD2 directive, we had the regulatory technical standards trying to define the APIs. We had ECC, European Commission, we had the local NCAs, we had the banks themselves and the TPPs trying to interpret how to build an API. And in reality, what we ended up having is a very fragmented European API market. There's more than 1,000 APIs out there, and none of them are alike. They all live up to certain degrees, the regulation and the stipulations in the RTS, but all of them has issues with that, even to some degree in certain senses. Furthermore, there's a lot of relative requirements into this as well that kind of makes it hard for banks to really understand how to be compliant, and for companies outside to understand whether they are compliant. One of those rules are they have to share the combined data they already share with a customer. They have to share that through the channel of the PC2 interface. So that means what they share of data in the web bank and the mobile bank combined should be presented in the PC2 interface. That requires a TPP like us, for instance, to know what they're sharing through those channels, but we don't have an account in those banks. Only the customers have an account there. So it has been really, really hard to get to the point where we can say we have one API and one standard, and we would probably never get there. That's why there's companies like mine in between that kind of aggregates all the different APIs and create one API out of this. So that's the end goal for me, is to make sure that everyone in Europe can access accounts in any country from the same API. So we are normalizing all the different APIs. We are standardizing the data sets and so forth. Why should banks actually care? They're being forced. This is a policy-led endeavor, and they're being forced by the EU to open up data and give these APIs away for free, even the payment APIs. Just imagine if you were a bank that you have to share the capability of doing payments directly from an account without being able to monetize it. And you have to build the infrastructure that probably would allow for massive load on your systems without being able to monetize it. Why should you care? Why shouldn't you be obstructive? Why shouldn't you be in opposition to this? What we've seen is actually that the banks themselves have become the biggest and most active TPPs. They're using this integrally in many of their solutions today. Account switch, when you move from one bank to another, credit scoring, in the mobile bank experience, in the web bank experience, in order to do account aggregation, to build like one unified interface for your money. And what we've seen over time is that the free space here acts as an API economy driver. It doesn't provide economies in itself per se. It does, like on second hand, like through the services you build yourself, you can build your own kind of new commercial businesses and so forth. But what it drives is the whole speak about like open banking as the next level, or open finance as the next level, like being able to provide extended data, being able to provide extended payment methods where you actually can participate in the monetization stream, is on top of minds for many banks now. And I think we will see the same kind of trajectory in open insurance, and some of this could then be speed booted if you take some of the learnings that we've seen in the open banking space. So should it be regulated or market driven? If you look at the market driven initiatives, then you would be creating your own incentives. You could work together to kind of figure out like who would be getting what out of the deal. You could build the solutions together. You could harmonize standards in the market, because you wouldn't be required to live up to predefined standards that you would have to interpret. You could do revenue share. There's a lot of positive things there. But on the downside, you would have like protectionism if companies really don't understand the full potential of this. If they don't understand the way the world works, they would be protecting this as gold. It could be one-sided incentives where the ones sharing off the data would be the ones gaining the most of doing so. It could end up being with poor third-party rights, that you could like turn off an agreement and then disallow something if they build a competitor to your own service. And then you have like local led, as we see open banking UK. It's enforced by the CMA, the competitive authorities of UK, and they're very active on a local level. So they're driving local enforcement, they're driving the standardization, they're driving the public awareness, making sure that the public actually conceives of open banking as something safe and secure to do. And it's still built on a licensing scheme that allows companies with a license to be checked by the government authorities, but also to hand over the rights they have to be able to do this without losing that option if it was agreement based. Because if you do a competitor to someone and they think that your service is hurting and they can close you down, then you have an issue. If you look at the centrally led one, it's like cross-border harmonization. That's what we see with PSD2. It's universal rights, which I think is great. We can export the rights we have in one country, passport it to all the other countries in Europe. That's great. It's a simplified go-to-market model. It has the downside of making local NCAs passive observers trying to be compliant themselves to this EU regulation instead of being very active, as we've seen with the UK. There is a tendency to implementation overkill. It's really hard for the TPPs, the startups, to get the licenses. Sometimes they have to wait, like in Norway, up to 13 to 18 months to just get a license to fetch data, which would be protected already by the GDPR rules that are in place in Europe. And there's an interpretation hell, like being in the interpretation jungle, helping each other out, trying to figure out what is up and down on what we should be providing to be compliant. So there's like upsides and downsides for each. And I think somewhere in between is probably the right solution. And somewhere in between, I think open insurance should be led. So if you go 100% like towards like the policy making, central led experience, you would probably be seeing open insurance happen in 10 years time. If you go market led, you would see it happen much faster, but with some of the downsides in terms of the TPP rights. So somewhere in between there should probably be looked if you want to do this swiftly in the industry. Why is it important? If you look at what happened over the last years, this is my last slide, by the way, Thomas. Data generation has been growing exponentially, right? IBM said in 2016 that 80% of the world's data was generated within the last 12 months. So the year before, only 20% of factual data was there. A year later, 80% new data has arrived. And this has been growing exponentially since then. And it means for everyone that knowledge and choice grows. We know more and more. Our kids know more and more. They watch YouTube. They watch like different channels. They know what happens in Afghanistan. They know what happens in the US with Donald Trump. Everyone keeps getting like information about everything, right? To the level where we do like Facebook, LinkedIn, Twitter, TV, and has to be great parents and all that. And that leads to information fatigue. And we then seek the solutions through technology. We seek the convenience through technology, which has led to a massive market share for companies that are building these phones, right? Because they provide us with an ecosystem of dedicated apps that work on creating convenience for us, so we don't have to be the ones sorting all this information. And slowly, because we had these, we start connecting more and more digitally. Young people today, they expect to be communicating with others through the phone. As parents, we hate when they sit next to each other with their phones, right? Because we really, really don't understand why they don't go outside and play together. But they are playing together. They are connecting. It's just a totally different world than from what we experience, right? And the last part is we're starting to make, especially also spurred by COVID, more and more of our decision digitally. And if you can kind of like acknowledge this path of technology-driven societies right now, it must be clear for everyone that if you really want to be present with your solutions as any company, you need to participate in those ecosystems. You need to make sure that you can be embedded into market generating efforts on these phones, right? So instead of like fighting against new fintech or insurtech companies, like working with them to understand what kind of market are they generating and what kind of insurance products could they be selling without becoming an insurance company themselves, is probably what we will see in the future for insurance. It's definitely what we will see for finance, where everyone now is talking about embedded finance, right? That if banks really don't understand how to embed themselves, they would lose the connection with the future generations, because they connect digitally, they expect to be doing it, they expect convenience, they expect personalization. And if the banks have to build that themselves, they have to completely transform. But what they could be doing is make sure to build the products that they learned to build already from PSD2 APIs, make sure that their core products are API enabled so anyone can just embed them, because then they have the best distribution mechanisms out there, and they can even distribute to new markets based on the PSD2 legislation that they didn't have access to before. So the future is about you, and we talk about APIs right now as the holy grail, but in reality, it's probably about getting to the point where we remove the P to talk about AIs and how we can help create convenience, because in the end, we have to serve up all the I's out there. And I think that's my leaving remark for this.
Thank you, Rune. Thank you very much. Super inspiring. And in the interest of time, I'll hope to get back for the questions later on when we do the panel. I don't know if you will be on then. You will probably not, because I know you're a busy man. But if you can share your slides with me, I will make sure to send them out to the participants afterwards.
Super.
I will quickly fast forward to you, Fuad. And Rune, if you can, I can get you to stop sharing. Thank you very much for participating this morning. And Fuad, if I can leave the stage to you.
Okay.
And just be mindful of time here, but I know you are.
I'll be leaving.
Can you see the screen?
Yes.
Right.
Take it away.
Okay. So in today's webinar, like Thomas said, I'll be speaking about the why, what, and how open insurance is going to be a force to reckon with in defining the functionality of the platform ecosystems to come. By way of an update, Open has become more than a standards making organization. It has transformed into a think tank leading the data model design, alignment, and also the exploration of use cases. And hopefully also in the near future, building developer playgrounds as well. Okay, so probably for those that work in innovation management, they probably recognize that the days of a single organization building and owning almost everything are ending. Now, this is driven by the emergence of platforms that are able to efficiently connect demand with supply. They generate network effects, and that allows them to extend their ecosystems to neighboring ones. So I'm a firm believer that in the future, no individual company will possess all of the resources needed to compete against these ever-expanding platforms. Of course, insurance markets are not immune, and for almost a decade now, investors and VCs have pumped billions of dollars to create niche businesses, new business models, and better fintech-enabled marketplaces. So from the smallest of startups to the largest institutions, data access, and more importantly, data usage has to be the single most defining factor in developing connected insurance and AI-tailored solutions. But that's not quite possible today, is it? If you consider that only 32% of the data collected by insurers is being put to work, so a whopping 68% goes unleveraged. But it seems policymakers and regulators recognize the role data mobility could play. And for more than a decade now, we've seen many initiatives that aim to unlock the social and economic value of the data held by government agencies. So in the UK and the EU, this has extended to force the banking sector, and force is a word that Rune used earlier in his presentation. And so they force the banking sector to share access to customer data with third parties. Policymakers saw big opportunities in empowering consumers and again, forcing banks to compete with fintech innovators. To date, the insurance market has largely remained untouched by policymakers, but that's changing very quickly. The FCA, EIOPA, and even the UN, would you believe it, are now exploring the feasibility, opportunities, and risks of open insurance and extended open finance. From within the insurance industry, you can see there's been action as well. Open was set up in 2018 as an industry-led project, and more recently we've seen Lloyd's take a similar approach in defining data and its scope through its core data record project. We're actually contributors to all of the 4 initiatives you see towards the right-hand side of this chart. But of course, data is only one side of the story. Competition to dominate the customer interface could upend the insurance market. And we only have to watch how Apple and Google have unbundled the driving experience. I have absolutely nothing against either of those tech giants, but let's have a look at how Apple has leveraged its platform. Few realize that Apple can now actually control the customer interface inside and outside of the car. In fact, Apple's CarPlay is now available in 90% of cars sold in the US. It started with the infotainment system and lately implemented a digital key for car access control through its digital wallet. Apple is investing in EV batteries, autonomous driving. It's developing its own powertrain, and rumors has it will launch its own Apple Car. For me, however, the striking thing about Apple's supremacy of the customer interface is its participation in industry alliances, such as the Car Connectivity Consortium and the Zigbee IoT Alliance, to develop open standards. In my earliest white papers, I had discussed the importance of open standards in generating positive network effects. So that's something we're trying to convince the insurance markets to adopt. Open standards will be crucial for insurers to match the value migration happening, which, as a matter of fact, was accelerated by the pandemic. That's where we come in as an organization developing open standards, and there are 2 key components here. So as you can see in the chart, the first is the development of a common data standard for sharing access to customer data and sharing anonymized and aggregated data. I will expand on this a bit later. So the second component will be the development of an open API specification. We will be adopting widely used solutions for API architecture, authentication, and authorization frameworks. As I explained earlier, Open is an industry-led initiative, so it relies on its community in developing almost everything it does. This obviously includes standards. On top of that, members could actually lead Open's projects, or they could launch own projects and invite other members to join. Members also collaborate in preparing collective responses to consultations and calls for input. One important pillar for Open since its inception was the setup of local working groups. These administratively and financially independent entities build local open communities. They tailor data and API standards to comply with local supervision and regulatory compliance. And they organize also forums and workshops. In February, we launched our first working group, and we're in discussions with potential partners also in Holland, Germany, and South Africa. Today, we've actually built a community of almost 300 institutions and startups. And I think since January of this year, we've launched 13 projects. Some have been completed and others are ongoing, and they include extensions to the data model to all lines of business, data alignment projects, development of MVPs, proof of concepts, one-click underwriting, and a few others. We're currently in the middle of launching 2 internal study groups to run the growing list of projects in mobility, cyber, legal, and compliance research. So to get you all quickly up to date of where we are with projects that I mentioned, well, 2021 has been really a year of achievements. We've published the Open Insurance Blueprint last February. This document defined the approach we're taking in developing the data and API standards, and a call for comment was also accompanied the release of the blueprint to give subject matter experts beyond our community a chance to make a contribution. I mentioned this already. I think we launched a working group in Italy. G2, a well-known startup accelerator in Milan, leads and administers the activities of the group. And for the first time in the industry, they will build a developer playground to test out ideas in mobility, smart living, and health tech, using our standards as a reference implementation. Another significant milestone was joining forces with the World Wide Web Consortium, W3C, and the Genevieve Mobility Alliance to align our data standards and develop MVPs and proof of concepts. We will be actually extending our partnership ecosystem to other open standards alliances in cyber, smart cities, health, etc., while developing the data and API standards for the remaining lines of business. And there are good reasons for this from interoperability perspectives. What you see here is a representation of Open's data standard, risk carriers, because they hold and control access to customer data, are at the top of the tree. We took a modular approach in how we define the groups of data properties. As an insurer transacts, for example, a range of insurance products. This could include pet, trade credits, and motor insurance. The motor insurance data model is represented in terms of the driver, the vehicle, and the coverage. If we stop at this stage, it would be fine. We would have a data standard that any insurance operator or distributor could adapt to their use case, but that's not our approach. We would rather have a standard that makes it incredibly easy for developers to experiment and develop new applications on top of insurance APIs. And that's the reason for our partnership with W3C and Genevieve, which will see us aligning our standards. In practice, this would allow any mobility developer using W3C's standards to swiftly integrate insurance solutions and vice versa. Insurance operators would be able to incorporate real-time data from vehicle sensors into their applications. I don't want to get too technical here, but what you see will become the resultant data model incorporating the common vehicle interface developed by our partners. So this is how we intend to achieve interoperability. Finally, developing use cases at global and industrial scale is what we're driving at here with all of our projects. Vehicle data, when coupled with vehicle service definitions and insurance claims data, will be able to produce great business value to OEMs and their suppliers. Even before third-party insurance applications are considered, we could develop a tech stack and in and out of vehicle abstraction layers and make it easier for embedding insurance products or the activation and deactivation of solutions. Likewise, OEM data could support insurers with behavioral-based pricing for new transportation modes, or could develop apps to help motorists drive smarter and safer. There may be opportunities to contribute to global reduction of CO2 emissions and help green tech initiatives. For us at Open, it's also another way of engaging our members with vehicle OEMs and suppliers, with InsurTech and with risk carriers. So I think I'll stop here, Thomas. As always, happy to connect with anyone interested in further information. Thank you.
Thank you so much, Fuad, and thank you so much for keeping your time slot. I know you had to accelerate things a bit here, so sorry for that. And again, in the interest of time and to keep pace, I will leave the stage to you, Simon, that will speak a bit about the kind of the commercial use case of open insurance, embedded insurance. So go ahead, Simon.
Thank you very much, Thomas. It's a pleasure to be here. I'm let me just get my slides up. Do you see them here?
Yeah, we do.
Great. Oh, hold on. I put the wrong. Let me put the right deck up. That would be good, wouldn't it? Always good to have the right deck. One sec. Here we go. Right. Okay. So I'm going to talk about commercializing open insurance, and the sort of this is the presentation I give to senior execs typically who are not technical people. So I'll share this with you, and it's based on a lot of research I've been doing in this space recently. And deliberately, I'm calling this presentation Embedded Finance and Insurance. And I'll explain why as we go along. But a quick introduction to me. I'm an independent advisor specializing in platform and ecosystem strategy. I create digital ventures with corporates, helping them to do breakthrough innovation outside of their core business. And I work with the World Economic Forum on various programs, and actually a Danish company called Rainmaking, which is a corporate innovation company that some of you may know. And I did a very big analysis on what I called embedded insurance, sizing the market. And you can see the link at the bottom here if you want to have a look at it. It's also on the website for this event as well. And I wrote a book last year called Fight Back. And the Fight Back is about how incumbents can deal with digital disruption, fight back against that, but also fight back against old ways of thinking and acting. And I think that's probably the main thing that holds us back at the moment in terms of incumbent businesses. The way that we've been successful in the past is not necessarily the way that's going to enable us to be successful in the future. So the problem that embedded insurance and embedded finance is addressing is that our financial system fundamentally isn't working. And we have this gap between what people need and what is on offer. And I'm just taking one example here. This is the retirement savings gap. What it says is that we cannot, as humanity, afford to retire if we carry on in the way that we act today. And you can see those gaps in trillions of dollars there. So there's a problem in terms of satisfying the requirements of individuals and society on one side. On the other side, we as commercial entities that are serving customers, we have a fundamental problem that our business models are out of date. And if you look at the economic profit of a range of different sectors, you can see down the bottom here that insurance, along with the other financial service sectors, suffer on average a negative economic profit. An economic profit is profit after cost of capital. And it was bad before COVID, and it's due to get even worse as digitization has accelerated. And we know a lot of the reasons for that, but one of the key reasons is that the leadership in our organization are not digital, and they don't understand some of the things that we've been talking about earlier on in this event. But there are obviously industries that are doing much better. And software, as we all know, is one that is due to get even more powerful and more profitable after COVID. But what's interesting, those logos at the top are now some of the most valuable financial institutions. They are now in the top 10 of most valuable financial institutions in the world, and they are all software based. They all run completely different business models than the old world financial institutions. And they are succeeding because they are satisfying customers in very different ways. And the incumbents, to put it mildly, are starting to get a little bit worried. This is Jamie Dimon from JP Morgan. And we've heard about how the banking system has been impacted by digitalization, and insurance is next. So we need to think differently. We're not satisfying customers, and we're not making money in the way that we used to. Now, in terms of business models, what business models are more powerful? And the issue we have today is that most companies spend all their time and money on digitizing their existing business models. And as I showed before, that's not really going to move the needle. And so the types of business models that are much more powerful are platform-based business models. And my contention is that embedded finance and embedded insurance plays a role in all of these. So we know that there's many more insurtechs that are creating intelligent digital solutions. There's an increasing number of companies enabling developers to develop interesting solutions. There's more marketplaces, and the ultimate business model is when you can orchestrate a whole ecosystem in the way that Ping An has done, rather than just selling insurance, creating a whole ecosystem around you of different businesses that you control and own, creating a much broader market for your core services. And here I've put some examples from insurance on the right and examples from non-insurance. And Stripe is probably one of the most powerful companies that have deployed the model of enabling developers to create new financial solutions. So these are the types of business models that incumbents need to adopt, and very, very few do today. And I'll try and give a rationale for why they need to accelerate their efforts. Firstly, let's define what we mean by embedded finance and embedded insurance. And this is the golden opportunity, I believe, for insurance and finance to help reduce the gap between what people need and what people are offered, and also to dramatically improve the business model of their organizations. And embedded finance and insurance, I've deliberately combined the description because it's the same for finance as it is for insurance, but I'm calling it this. It's about abstracting functionality into technology to enable any product or service provider, any retailer, or any developer to seamlessly integrate innovative financial services into their customer propositions and experiences. And one of the classic examples of this is Uber, that when I get into the Uber car, I don't have to pay the driver at the end because the payments have been embedded into the experience, and it's been an invisible native component of my experience of getting into Uber. But what we're now starting to see is that insurance is being embedded as well for the Uber driver. So when you become an Uber driver, you get some free insurance as part of your offer to join Uber. And indeed, on top of that, a bank account to help you manage your income from Uber as well. And we're starting to see that mix either as if you like, an invisible native component of someone else's service, or a visible complementary add-on that is much easier to be offered than in the past. So we know that warranties have been around for years, and you can buy insurance when you buy your flight at the same point of sale. But in the past, it was very complicated, took a long time of negotiation and a lot of effort to integrate. But now with digital technology, third-party service providers and brands are able to very easily embed insurance or lending or payments into their propositions. And what's really interesting is they're doing it now more and more. You can see some of the examples on the right-hand side. The aim ultimately from this is that third-party brands and platforms and third-party businesses can create much better customer experiences, faster, cheaper, easier, leveraging new data sources. And we've talked about open finance and other open data sources already today. And I'm going to, in a second, show you the benefit to merchants and then the benefit to those who are enabling this. But one threat I'd like to suggest for the incumbents is that embedded finance and insurance and the technologies around it is now making it really easy for these third-party businesses to dynamically bundle up the right type of financial service at the right time for their customers, and to be able to choose dynamically between different types of products, and in the insurance space, different types of policies. So no longer is a retailer stuck with one insurance provider. They have the ability now to choose between multiple policies and multiple underwriters to create very personalized solutions and relevant solutions at much lower prices, at much more affordable prices for their customers. And indeed, to be able to offer claims handling, much more efficiently than they currently are offered by the incumbents. And one example from one business, a logistics company I saw recently, is able now to offer claims handling from 20 days to 2 hours, because they are no longer reliant on a single or a few incumbent insurance companies. A new developer platform is enabling them to access exactly the right policy from the right underwriter at the right time at a very cheap price, and be able to do all the claims handling very quickly. And part of the reason for that is that they have combined the data that they have on their customers with the data required by the underwriters to create the right types of propositions. And so it's that combination of data from these third-party businesses that is fueling the ability for smart developer platforms to integrate and aggregate third-party insurance providers to enable the dynamic bundling of any policy in any category from any underwriter for different types of customers at different times in their lives. And that's what's happening already now, and is going to accelerate very fast. And those who enable it, I think, are going to be very successful. So in terms of benefits for the third parties, I've got a few examples here to share with you. But in terms of B2B software companies that are supporting various industries with their businesses, what we're starting to see, and this is particularly data from the US at the moment, is that if they add payments or loans or insurance onto their offerings, they're already embedded in their customer's business by providing accounting or ERP or operational management software. They've got this captive audience, and quite easily now through digital technology, they're able to offer payments and loans and insurance. They can see how creditworthy their customers are because their systems are managing their businesses. And they have seen the opportunity to increase their total addressable market by a factor of 5 by offering financial services and now increasingly insurance. So there is big demand, or there will be increasingly big demand from third-party B2B software businesses to be able to embed insurance as well as financial services into their propositions. As you may know, of course, retailers and manufacturers have in the past tried to sell, or have sold warranties and have tried to sell insurance, but it's been very analog, very clunky experience. You have to go outside of the website to speak to a broker or speak to an insurance company. And now it's all embedded in the experience at point of sale. And this is an example of a manufacturer which is selling something, and you can just about see there, I hope, embedded there is the buy now, pay later option, but also the access insurance option. And all of that experience is happening from within that one website without having to disappear off anywhere else. And for the merchant here, the impact on their order values and their conversion rates can be very significant, as you can see there. If we think a bit more broadly now, some large digital platforms have thought about how they can use embedded insurance to expand their customer base. And the example on the right here is from China with Ant Group. And through their Alipay app, their super app, they've started to engage poor rural people in China into insurance. So in their case, there's 100 million new customers that they've engaged that never had insurance before, didn't understand it, couldn't afford it, didn't think it was relevant for them. But because they have these people are using Alipay in their daily lives, and Ant Group is able to educate them, engage them on insurance, and then through a partnership with 90 90 different insurance companies, able to design very cheap, affordable, and personalized insurance products to start to bring 100 million new customers into protection from insurance. And there are 2,000 different products that, through this platform that they've created with their 90 partners, they're able now to make very tailored micro insurance offers for life and non-life to their customers. And they are taking the lead in designing the product and then working with their partners on the insurance delivery side of things. So these are a few examples to share with you about closing the protection gap on one side, about helping merchants to generate more profit. Often some of the profit from financial services is more than they make from their core business, from their products. And then enabling software companies to dramatically increase their value to their customers. Now, millennials, of course, are the future, and most millennials think they'll live forever. They are indestructible and certainly don't need any life insurance or accident insurance, and certainly not particularly interested in investing or saving for the future. But one insurer in Singapore decided that they needed to engage with this market early, to capture it early, and to help them become part of the insurance world and help them in the end solve their protection gap issues in the future. And so they created an app called Snack, which allows millennials to trigger the purchase of insurance as they go about their daily lives. So when they go on the metro, when they buy something from a shop, when they go to a gym, at those moments, triggers are made and they're asked if they want to put, say, 20 cents or 50 cents aside to their insurance. And this has become, they've gamified it, they've made it very interesting and exciting, and they've also created a loyalty program with third parties. So every time you buy something with Revolut, for example, in Singapore, Revolut puts in 100 Singapore dollars into your insurance program, and that they've got a whole load of other partners that they've teamed up with via Visa to do this. So this is one of the best examples I've seen of really engaging millennials in insurance and embedding it invisibly into their daily lifestyles. So I think we need to be thinking about how we can do this much more over in Europe as well. So just to finish off, I'm going to share with you some of the financial analysis that I've done. So this is the market potential for embedded insurance for P&C alone in Europe. And I've done the same analysis for US and China and the rest of the world. But what you can see here is the relative distribution mechanisms for P&C insurance in advanced European markets. And it's I should say it's an average because markets are slightly different, but on average, you can see that tied agents and branches are the main distribution platform, brokers and aggregators next, and so on, and fully embedded. And by that, I mean it's all automated in the way I said before, that a developer working for a retailer can automatically choose and configure the right type of solution for their customers. So it's not, just affinity programs or warranties. It's fully embedded, automated, and digitized, leveraging data. It's small today, but my forecast suggests that by 2030, it's worth about 20 or 24% of the market. And that comes to a very significant amount, about $140 billion. Now, what's really important is that GWP, in terms of how that's valued by investors, it's valued 5 times the rate of normal insurance revenue. And that's because this is a software business, a software-enabled business, like Stripe is in the payments and the lending space. So if you are an enabler of embedded finance, you are a software-centric business. You back off the risks to insurers. You don't take on those liabilities, And my contention is that that is worth, that figure you see on the right there is worth 5 times plus the multiples of traditional insurance companies. And that's why this is so attractive to VCs at the moment, so attractive to entrepreneurs, and we'll hear from some in the next session, and also should be attractive to incumbent insurers to say, how do we play a role here and create our own digital ventures to enable this? And just finally, what I've described here is part of the broader movement of embedded finance. And if you extrapolate the figures I've just showed you worldwide and compare them to embedded lending and embedded payments, embedded insurance is in principle due to be the biggest part of embedded finance, worth about $3 trillion roughly in that time scale. And what we're seeing here is that if you combine all those elements together, you get to a new market potential, which is double the value of the top 30 global financial institutions today, and about 50% more than the top 30 global software companies today. And what we're seeing is that we're seeing financial technology being the new innovation platform for entrepreneurs and innovators to create new value, which is closing the protection gap from the insurance point of view, and helping, potentially helping incumbents to reimagine their business models to be more effective in this digital world. So I'm going to just finish by saying that the most successful insurer in the world is Ping An from China, who you may know very well. I've spent a lot of time studying them, and they have executed a platform and an ecosystem business model better than anybody in the world. And now we're starting to see some European companies emulating what they're doing. And one good example is Baloise Group in Europe. And what they decided to do in a number of different market spaces is to say, well, we want to be involved in more of people's daily lives, more of their lifestyle, a bit like the example from the millennials here. And they say in the home and the home living market, at the moment, we just play a role on the left there in the dark blue. We provide insurance, mortgages, and pensions. But there's so much more that goes on when people live in a home. And you can see some of the examples here in the bubbles. And what they've said is, why don't we create our own ventures in these spaces that help people with their activities in these areas? And these are not insurance businesses. They're marketplaces for finding cleaners, or their property management solutions, or their software solutions. But if we can do that, we can build up our own distribution channels. Essentially, we're creating our own third-party customers. We're creating our own new spaces in which we can embed our financial services, and we become much more relevant to our customers, to the marketplace in general, and we're creating a new distribution channel which we can control. So this is one strategy which I think is pretty bold, and if you can get it right, can be very, very successful, as we've seen with Ping An. So finally, my biggest message for incumbent businesses is, if we want to execute against embedded finance and embedded insurance, we need to create a true ambidextrous organization. This cannot be done from within the core business. It never works that way, because the core business is set up and optimized for delivering the current business model. And all the metrics, all the skills, all the experiences, all the culture, all the products are great at delivering traditional business. And when we try and introduce a new type of business model, it tends to be crushed by the immune system. So obviously, we do need to optimize the core. We need to create API networks and microservices. We need to automate everything we do to dramatically increase efficiency. But we need to, in parallel, to create a separate space in the organization where we can fast track the future, create the ventures we saw on the last slide, collaborate with startups in new ways, and create a new space where we can attract new talent with new metrics to drive forward new types of business models. But crucially, and this is the thing that many companies have failed with in terms of all the innovation theatre that we've seen over the last 5 years. Crucially, we need to connect these together. We need to create an operating model that supports the core being optimized and the future being fast-tracked, so we can support and reinforce both those activities, transfer knowledge, make sure that the fast-track the future can access the assets of the core business. And if you can do that, like Ping An, like Amazon has done, like Apple has done, and the other leading digital companies, then as incumbents, we can play a role and improve our economic profit into the future. So thanks very much. I hope that's been useful.
Thank you so much, Simon. That was a really, really insightful presentation, and I'm sure also thought-provoking for some. And I think it's a perfect segue into our panel debate. So if I could ask Michael from Tryg, Seal from Insurance and Pension, and Esben from Penny to turn on your cameras. And yeah, perfect. And maybe if I could ask the rest of you guys to turn it off, then you will see the three panelists and myself on your screen. Perfect. Great. So welcome, guys. And I'll, in the interest of time, again, we'll take a very short intro to who you are and why you do what you do. So, and I will start out with you, Seal. Can you give a short intro to yourself?
Yes, thank you, Thomas, and hello, everybody. My name is Sigrid Flortoft. I am heading the digitalization department at Insurance and Pension Denmark, and obviously following the Open Insurance Initiative with great interest. I think I'll leave it at that. Thank you.
Great, thanks. Michael, an introduction to you, and maybe a short one for Tryg also.
Sure. So my name is Michael Poulsen. I'm heading IT development in Tryg. Tryg is, I guess, on the way to becoming the largest insurer and non-life insurer in the Scandinavian market. Currently today around, I think, 4,000, 5,000 employees, growing to around 8,000 when we are done with the merger with Trygg-Hansa Sweden and Codan Norway. Yeah, I'll leave it with that. That's fine.
Thank you. And then you, Esben, the startup perspective. Who are you, and a little introduction to Penny.
Yeah, thank you very much, Thomas. So I'm a co-founder of Penny.io, and Penny.io, we're a Copenhagen-based insurtech, where we actually provide a software as a service platform for embedded insurance. So essentially, we connect insurance companies with partner companies that want to embed insurance either in existing digital propositions or in their sales flows. And we work across Europe with insurance companies and partners around this. So with on the partner side, retailers, apps, web shops, membership clubs. I'm also on the board of advisors of the Open Insurance think tank that was presented earlier by Fuad Hosseini.
And I believe Penny has just raised quite a substantial amount of money, right?
Yeah, there's a lot of capital and demand flowing into open insurance slash embedded insurance, and we're benefiting from that, and obviously transforming that into benefit for partners and end customers in the end, hopefully over the next year or so.
Cool. So I'm gonna jump right out, and I'm gonna start with you, Seal, as kind of the industry association. Could you give kind of an intro to your position as an industry association? We've heard, we heard Rune Maj speak about his journey and the open banking journey, and I think in particular, his views on market-driven or centrally driven or something in between. Could you give an intro to what's the industry association's position on open insurance, and maybe also just shortly on some of the major issue you see as an industry association?
Certainly. Well, as we're representing the incumbents in this matter, we're kind of seeing ourselves in a bit of a difficult position because obviously the industry sees a lot of potential in open insurance. and is also working toward forming strategic partnerships with fintechs as the drivers of innovation. And we see this happening to a large extent. But since the concept in IOPA's paper is very broadly defined, we're also very worried about this initiative because it could potentially have a very negative effect on our core business model, as Simon also illustrated. So to put everything very shortly, they're very much in favor of a voluntary and market-driven initiative on open insurance. And you could say the Danish insurance and pension sector has already been working on a form of open insurance for years. We have a lot of successful consumer initiatives. We have the insurance guide. We have a number of IDE solutions that actually allows customers to transfer their claims history from one when they're switching from one company to another. And we also have the pensions info, which allows people access to their pensions data through all 3 pillars of the pension system. And this initiative is also open to actually in 2019, open to banks and fintechs to get access to this as well. So basically, we see a need for market-driven innovation here. And I also noted that Rune Meyer said, well, if you actually see the market-driven approach, open insurance will probably happen in a couple of years. If you start regulating it heavily, it might take 10 years or more. So that's basically our position on the matter. And then we're also looking at the whole PSD2 and the problems. But basically, we're a bit in the same situation as the banks were with the PSD2. But we see the PSD2 as more opening an infrastructure and not opening access to data, because the data held by the insurance sector is vastly different from what the banking sector operates with. There's a lot more personal data here, and it's a lot more of an ecosystem. So we think you need a different approach to that to enhance innovation here. Thank you.
Thanks. And I think I'm going to end up with you, Esben. So I'm going to ask Michael the same question, kind of. So as the largest commercial, soon to be the largest commercial insurer in the Nordics, what's your position? What is Tryg's position on open insurance?
Well, I think we are very much in line with what Sigrid talked about, and I think our position is that we know open insurance will open up for a lot of innovation, no doubt about that. It's also kind of a threat for the insurance industry right now, but we have to ride on the wave of the whole movement around open insurance. It's a little bit like, you know, the cars back in the 100 years ago, right? They were invented, but we didn't have any highways or any roads or anything to drive them on. And I feel like it's a bit the same. We are in a situation where we need to take smaller steps towards this future, and not go too far ahead too soon, because then we will break, so to say. So for us, it's certainly an opportunity, but it also goes the other way around, because opening up for insurance and making data something that flows between us is also something we can benefit from. We can pull in a lot of data from other industries and for other areas that we can use in our work inside our company. So it's a two-way side, so to say. So we are open for this for sure. We need to practice walking before starting running. And I think, for example, just simple things as getting our APIs and control and so on. I know Esben knows that because we have a collaboration with Penny also on this. Just simple stuff like that. We need to get that in place before taking the next step and the next step and so on. Yeah, we will see a movement where, as you also saw in the previous presentation, that more and more traditional insurance products will disappear and be taken over by, for example, embedded insurance. But it's going to take some while, and we need some good discussions with our industry partners, with the different authorities in doing the right regulations, especially around the GDPR, where we have a lot of data that is very sensitive.
All right. So Esben, it sounds like from the industry association and from the largest commercial player that should be like very much a market-driven initiative, if we are to use the term as Rune Maj put it, or on a voluntarily basis from the industry. So a little bit from the insurtech perspective, how do you see your position?
Well, I think actually it was really interesting what Rune Maj said, that it actually started out as a grassroots approach, trying basically to kind of hack the system when the bank said no for open banking, which led to that was not what directly led to PSD2, but actually that was the approach taken. And we're seeing some similar approaches in insurance. So there are these insurance lockers in the UK that are actually trying to give customers an overview of all their insurances, which is really difficult in insurance because you do not have those APIs in place. So I think on the one side, we will unfortunately see some of the hacks out there because it's not everything is open. That's also due to history of insurance, obviously. What it will also lead to, if we don't address that, is that Tesla, Google, Apple, these kind of companies will make their own innovation around this, and that's my concern. So I've worked with traditional insurance companies such as the one Michael is representing. We're having really good collaboration, but I think we also see that there's a huge difference in approach from insurance company to insurance company, and that's where I see the challenge lies in having this only to be market led. Honestly, that will work for some, but not for all. So my view is definitely that'll be a balance. One is to have some basic regulation, or at least a foundation where insurtechs or fintechs or other companies that really rely on this and can innovate based on this, together with traditional insurance companies, has some foundation. Okay, what can we actually do? What are the level of openness that we can rely on? What are requirements, expectations around APIs? And then on the other hand, having a traditional market-led approach. I think the really good thing about insurance, a bit compared to open banking, is that it's quite commercially driven, which also propels the industry forward these years. So there's a lot of things happening. We're a bit in front in actually thinking about open insurance as opposed to the banking back then. So there's a huge opportunity, I think, for traditional insurance in looking at getting in front here to actually help the industry establishing that foundation, so it's not kind of hacked or taken by Tesla or other big companies out there.
Cool, and let me pick up on that, because I'm sitting and looking here because I took a screenshot of Rune Maj's slide, from the market-driven approach. So Michael or Sigrid, some of the things that he mentioned as some of the downside of that was kind of like protectionism, like very one-sided initiatives, probably towards the incumbent players, to be honest, and then also poor TPP rights, right? So if we take that approach, and I think that's what Esben is also alluding at a little bit, what's your take on that? Maybe starting with you, Sigrid.
It's a very good question, because obviously there is a risk that it won't move as fast as you would want it to, and obviously it would be the market players that would set the regulation. But then again, I could also reverse the question and ask you if you wanted to be subject to mandatory regime where you had to build APIs like you had with the PSD2 and have that approved by an FSA in order to give somebody access. So if you turn the question around, I think you would be able to see the same perspective as we're looking into. So if you have to move forward here, I think we need to be able to have some good discussions as to what are the good business cases here, what's the potential, because that's not really what we see in IOPA's paper. We just see as sort of a notion that if we open up for data and data access, somebody might be able to make something out of it. instead of having the discussion, can we actually have some strategic partnerships? Can we find the really good business models and focus on those, and maybe look at how do we need to tweak something then in order to gain access here? But that's really our perspective.
So Michael, jumping on to you. So regulation or not regulation, what's your thoughts?
I think our thoughts is kind of in between, because to Siri's point, one end will be slow and very rigid and very cumbersome and annoying, to be honest, and the other one will be out of control, I would say, at least right now. Maybe later when we are more mature and so on, we can open up for that. So I think we as a company are seeking for some guidance, some guardrails, some principles to help us guide and steer in this unknown territory, so to say, in order for not to go, in 7 different directions and so on, but still have some kind of open market possibilities to explore options and kind of build upon this. I think I completely agree with Siri on the what we saw with PSD2 and so on, that it becomes too rigid, too narrow, too detailed and so on, and we don't want to go in that direction. That's at least Tryg's position to this. So more a steer, a guide, guardrails, that's the way we would like it to be.
All right, so Esben, there's a lot of talk here about, let's get the good use cases of open insurance or like embedded insurance out there. And I think some of the speakers here in this event gave some really good examples, but it could be interesting also, maybe a little bit closer to our own Nordic region. What is it that you see? What are the good use cases? But because then we can start discussing those. What are the benefits for the consumers?
Well, I think in general, since the Nordic region is so digitalized and in general used to digital tools, that also applies to actually the insurance space. So we're having good examples. So Siri mentioned one of them. So we have a kind of an industry-led comparison, price comparison site, which works really well. And those initiatives we've had from the early days of the industry, actually exchanging of information in regards to claims between insurance companies and other things actually. So I think actually the Nordic region, if you look at some of the, if you look at that from a local kind of agreement point of view, we're doing quite well. My concern is more that now this is also this is an awareness that is not just in Denmark right now. So we're having and I mean the Danish insurance market, I guess, is one of the most profitable insurance markets in the world. So we have companies standing outside Denmark also looking at this and say, all right, and the Nordics in general looking at this, and how can we actually kind of implement use cases here? And I think as an industry, we will benefit from kind of a collaboration on that, to say, all right, how do we actually position ourselves? How to get in front of the market, also with regards to data sharing, with regards to APIs, with regards to supporting use cases in general. And also because in that sense, I'm a bit concerned that if we hold back too much, it'll open up actually for other types of players to enter the market. So I think we have a really good status and a really good shape in the Nordics, which we can actually use to propel forward. We are some of the most advanced digitally, in Europe, at least in this region. So we have an opportunity here that I could see play out if we get together and find out how do we actually use that, and apply open insurance classes. And I think what's really interesting is we did an in-depth analysis of 41 partnerships in insurance recently, and one of the things we found, this is just one conclusion from it, was that where the partnership are based on open APIs, a range of benefits occurs in these partnerships actually. So one of the benefits is actually in general satisfaction from the partner of the insurance company increases significantly. So what 41% the satisfaction increases if they are able to supply an open API. Speed to market increases significantly, and actually cost of maintaining that partnership decreases. And I think I think there's a general kind of consensus that at least what I see the industry is going towards open APIs, but it's very scattered approaches. It's on very different levels from company to company. And I think and there's also what we're having today, discussion around what is that guidance then that we're talking about. If that's not regulation, what is that guidance? Are those rails that help us all to realize these cases going forward? Every week we speak with a lot of apps, websites, potential partners that actually and their developers want to connect. And in some cases they are able to, and in many cases they are not able to, because insurers around Europe have different levels of maturity.
So I'm going to open up a little bit for some of the questions I can see here in the chat. And I think that the last one that came here from Matthias I can see here, see with Espen. How do we secure that open insurance is compared one-to-one or used correctly? The data is very different from what we see in banking because the actual insurance products are described in 30 to 50 pages of terms and conditions. All right, Matthias, I think I just had assigned some papers from my bank, and I can say it was not less than 50 pages. So I think that was very much an argument from also the open banking players back in the days. But let's see here, Espen, how do we actually be sure, because the data apparently here from the insurance industry is very different.
Should I go first?
Please do.
It's a very good question. I'm not sure I have a really good answer to that. I mean, obviously, a lot of the formats we're working with in the insurance industry is harmonized across the EU. So a lot of it should be the same. That being said, obviously different insurers have data formats and different data formats. So if you do need to have something you would be able to compare, like we did in the pensions info, you would have to develop some data sets, common data sets to exchange.
And I think with actually back to what Rune's point was, that kind of the lack of standardization also leads to the rise of these, you can call them aggregators or data intermediaries, because they need to kind of do that translation, expose one API, for example, or expose data in a kind of standardized format at least. So I think the way I look at it, and I totally agree, the insurance industry is, I mean, the products are complex, and all the documentation around the products are complex, but I think, and there are also initiatives to actually standardize that. So you have IP documents today, which is actually a good means, and it seems the industry has adopted that really well. And I think to actually give the customer some understanding of what are basic kind of product features, which is really good. And I think if we don't see more of that, it'll kind of be left to these intermediaries to do that translation and provide APIs. Because if we are to make it easy to engage with the insurance products and understand terms and conditions, and there's a far way to go today, I would say, for end customers to understand that. If that's not led by the industry somehow, then it'll be left to intermediaries to do that translation, which I would think was a shame. To have that more kind of also say, okay, can we agree on some data standardization formats there as well? There's also some level of agreement required, at least.
So I actually got a question here to me directly. So it would seem that giving access to data and giving data free some of the intermediaries, you actually talk about that, and that's why I mentioned it here, Esben. Some of the intermediaries here are brokers and insurance brokers, and giving data free for everyone to use or utilize, that could mean that that's a big threat, especially for like insurance brokers, because you would we'll have a lot of different third-party providers coming in and using that data. And to some extent, you have a segment of here with the brokers that is living on the complexity of the incumbent players, right? Making that transparent to the customers. So I guess that's an open question to the three of you. How do you see that this kind of movement in regards to the segment of insurance brokers?
I can address that a bit, at least. I think what we're seeing is that brokers are also transforming into more digital distribution. So that's what's happening. We don't have, the Nordic region is not that broker-led, but in other regions that has been very broker-led. There's definitely the rise of digital brokers, where my expectation is that they will also benefit from more openness and more open APIs and access to data sharing such as that. At least in the markets where we see brokers happening a lot. Obviously, they're also on the threat of the more mature the incumbents become, the less intermediaries are typically required, and in that sense, brokers are a focus area.
Cool. I got another question here from Ashish from the chat here, and that's it says here it's for Esben, but it says, what challenges do you face while collaborating with insurance giants? I guess that's something you have some experience with, and how do you resolve those challenges?
In general, we have a really good, yeah, exactly. No, in general, we have a really good collaboration. I think that's not the issue. It's actually not so much on the collaboration. And I mean, obviously it requires, fundamental compliance from our side. It requires us to be mature because we are working in a regulated financial space here in general. So there's a level of entry. I think it's more, you go to the ones today that are more mature, and you need to do that because the level of just APIs. So I think the percentage of incumbents in the world that actually have APIs to some extent is around 6%, which is very low compared to other industries, even like automotive. So you're kind of driven towards the one that have a more open and innovative approach, obviously. So that's what we kind of need to do, work with the ones that actually allow us to work with. In general, the collaboration is really good. I mean, insurance companies want also to establish new propositions. They want to be innovative. They want to be digital, and that's all going on. But it's the level is very different from insurance company to insurance company. I can tell you that.
I would like to say from our side, it's also a matter of being a big company like Tryg, having the culture we have and having the way that we work and coming with a lot of legacy. I mean, we are 290 years old. There are something we can't fix, something we can't innovate. There's something we can't, go as fast as Penny can do, for example, right? So we need to collaborate with likes like Penny and others. And we have created our own small insurance company next to us, Undo, for example, to kind of put more speed in this, because if you just do that internally, it will not, there's too much friction. So we need to get out of our own comfort zone and collaborate more with Penny and other companies for sure. And then eventually we get inspired, and then we get it, and it's also good for our competition and so on that we have this, because otherwise, again, the speed will be too slow.
Okay, so I think we're just about getting there. I will give you one last question to all three of you, and you'll have around 30 seconds to answer. And I think from kind of Copenhagen FinTech perspective, and we've been part of the whole movement since the inception in 2016 with open banking. And we have seen, and we are seeing now, and it's been a long and winding road, and certainly with bumps on the road, but we are beginning to see the accelerated innovation in that space, in the banking space now, because of PSD2 and open banking. So we're seeing alternative lending models, credit scoring, ESG screening, SME financing, expense management, payments. There's a lot of different innovation and a lot of different companies, and we haven't really seen the same thing happening in insurance. So the smallest pie of our fintech mapping, that's actually insurtech. So I think, and 30 seconds from each of you, why is it that we just don't copy what we see and just like give it off free and let's start the innovation? So I'll give Michael and Sheila a couple of seconds to think about that, and then I will start out with you, with you, Esben.
In very short, I think we should do to some extent. Obviously, that's my position. I think, and my hope is that it'll be very much industry-led, also because that's where we find the right balance of, regulation versus guidance that Michael also brought up. So I very much agree with that. If we can find that balance, it's really good. And then, my last comment with my expectation is that, the traditional insurers will be the one, when we meet again 5-10 years, all of us will be the one that benefit most from this. This is definitely my expectation. We can see they have a kind of unique opportunity to actually grab this, and it's starting to happen around the world if we look out. So there's a unique position here that can be grabbed that'll benefit traditional insurance companies.
Michael, and then I will end up with you.
Yeah, I mean, my perception is insurance compared to banking has always been a little bit lacking behind, sorry to say. And I've been in the banking industry also, and it's kind of like we're catching up. And I actually also think it's a change of mindset, a culture that happens in insurance industry now also, where we taking big leaps towards actually getting in front instead, right? So I think you will see way more happening in this space throughout the next 5-10 years. I totally agree with that, and I'm just looking forward to this, and we will all benefit from it. I mean, if we take the right choices, Tryg as a company will take benefits from this, and customers will take benefits from it, and our partners will certainly also have a great benefit in what we do here.
And I can say, just to add to that, we are actually, Copenhagen FinTech are running a challenge and a program together with Tryg right now around embedded insurance. I know my colleagues Andre and Oliver are also in this call, so maybe I can get you to post a link for that challenge for any one of you that are interested in that. But I'll fast forward to you, Sheila, for a last comment.
Yes, very short. Well, our position is basically we don't see regulation as a way to promote innovation. And basically the one thing that we're really scared of is if you open everything up, you end up probably benefiting the big tech giants instead, because with all their data points, they would be able to sort of sweep the whole market, find the good customers, and then leave us with the rest. So I think we believe a market-driven approach to this is the way forward. And I think you just need to have a little patience. I know this is like Michael said, we're coming around. It's just moving a bit slower, but we're coming around. We see collaborations with fintechs. We see a lot of investment going into this, so it's coming. But as I said, we just don't think regulation and opening up everything is the way forward at this moment.
And with those words, and I think a very good comment here in the chat here also from Casper from FDM, saying maybe we as an industry need to realize that none of us owns the customer. So with those words, I will say thank you so much to the speakers, to the panelists. We'll make sure to make this recording available, and hopefully also together with the slides. So if all the presenters can share their slides afterwards with me. Check our website. Hopefully within the next couple of days it will be made available. Thank you so much for all of you that chose to listen in this morning, and this is certainly a topic that we will follow up on also together with the industry association that is now a partner of Copenhagen FinTech. And I'm sure also Esben will be in my heels also around this topic. So thank you, everyone. Stay safe out there and enjoy that the restaurants and the bars are open today. Thank you. Have a nice day.